9 steps, the wealth creation formula. If you ever thought about why you're making money but still not getting rich, and here's the truth that no one tells us. Making money does not make you wealthy. Most people increase income and immediately increase lifestyle. Step number 1, create income. So the step 2 is to increase your income. And now step 3 is to save this money. First, you need to invest in your education to understand to have the knowledge of the investment. So that's why you need to create multiple streams of income. Eventually, instead of you physically working, the investment is gonna work for you. Notice something, this is not one cycle, this is a loop. So now, here's some I wanted to talk to you about some of the case studies. Okay, and this is, again, this is the money traps. These are the mistakes that typically business owner make. So in this particular case study, Miami dream. So this client lives in New York City, and then she has this dream to buy this condominium apartment in Miami. She's thinking maybe she wants to move in here, or maybe she wants to rent it out as an investment property. But here's what happens. Okay, so she's thinking that she's investing this, but in other words, it's not an investment. She just upgrades her lifestyle. Okay, so now what happens is that she takes her income and she turns this into the liability. And you're thinking, okay, how's that? Let me tell you about it. So look at it this way. The apartment costs 1.25 million. So besides just paying for the apartment, even though, let's say, if she takes a mortgage, she still needs to come up with the down payment. Okay, so the down payment is completely dead money. The second thing is that now you have to pay for the mortgage, you need to pay for the real estate tax, for the maintenance of the condominium, plus for the insurance. So basically, if you calculate all of that, so in her case, it's going to be like a little bit more over like $20,000 a month. So if we calculate all of that, so that's a negative cash flow of $20,000. It's not, when money coming in, that's an asset. But if it's money coming out, it's a liability. It's not, it's a negative investment that you're in. And then, you're listening, and that's exactly what happened to her. Again, you remember the money trap number 2 is the education. Who are we listening? Who are we getting our advices from? Okay, and I hear this literally every day. Like, I live in Miami, all these real estate agents, buy this pre-construction apartment, buy this property, that property, it's gonna go up, it's gonna be such a great investment. But first of all, here, that is actually, I'll tell this everyone too, is before you ask advice from someone else, ask them what are they actually doing in their life. That would be great, because if you're taking advice from someone else, you want to make sure that they're already succeeding in that. I have an interesting story. I remember years and years ago, I had some health issues in my stomach, and I remember that I went to the doctor. And here I am, like, sitting, he's gastroenterologist, and I'm telling him about my health issues and everything. And then he's sitting right there, and he's like, no, just no worries. Here's the prescription. He gives me the prescription for the Nexium. And he's like, okay, just take this, takes this every day, eat whatever you want, and you're going to be fine. And I'm taking the prescriptions, and I'm looking at him, and he's very overweight. He's very big. And then here I'm thinking, okay, if I'm going to take his advice for that, all right, I'm going to eat whatever I want to eat. So basically, he tells me to do whatever I want to be doing, but not what is the right thing for me to do. I mean, is it the right thing for me? He tells me, you can eat as many burgers and French fries, anything that you want. Just take the Nexium and you'll be all fine. And I'm thinking, okay, is this what I need? Because if I'm going to keep doing what he is telling me, then I'm just going to look like him. So you see, like, be careful, like, who are we getting advices from? So, and in this particular case, like this real estate agent was saying, oh, like you're gonna buy this property for this 1.25 million. It's gonna go up in value, and it's gonna be such a great project. Okay, yes, it will go up in value. But here's the things that this is where the education comes into the place. That's why I shared with you that you need to educate yourself. To educate yourself, not only knowing about the real estate and buying them, but how it actually works. Educate about yourself about the time value of money, how to underwrite the deals. So in this particular case, so let's say you're buying for 1.25 million plus all the closing costs. So you need to add up to the cost of the purchase. At the same time, if you are paying all this cash, negative right now cash, okay, so let's say if she's paying this 20,000, let's just assume that 20,000 every month, and she's going to hold down to this apartment for 2 years. So we're talking about what, $480,000 in 2 years. So now let's say she sells this apartment for $1.5 million. And you're probably thinking, oh, wow, that's such a great deal. I bought the apartment at 1.25 million. Now I'm selling 2 years later at 1.5 million. It might seem, right? If I tell you that, it seems like, yeah, you made $250,000 was so easy. But is it actually true? And then whenever you're talking to someone, because I literally hear this all the time, even with my clients. Okay, so before you listen to someone else when they are telling you this, so then start asking them the questions. Okay, how much money did you put in for these 2 years? Did you rent this property? So in order, like if she is paying 240,000 every year as cash out for all the maintenance, the mortgage, the interest, the real estate tax, the insurance, all of this. So is she paying all of this, or is she getting rent payments? So let's say, yeah, she's getting rent payments. Okay, she's only getting 10,000, but then she's paying 20,000, then she's minus 10. So that comes out 120,000 a year. So that's 240,000 in 2 years. So even in that case, if you're going to sell that apartment for 1.5 million in 2 years, you still lost money. Because at the sale, you need to pay the closing fee, you need to pay your broker. So this is all the things that you need to consider and underwrite and know the numbers before you make all these investments. All right, case study number 2, first big money. All right, so here's another case study. So this client, he started making great money in the business. And then if you remember our cycle, right, you make money. The second step, you make more money. That's exactly what what he's doing. But then the third step is to save money, invest. So he's skipping this step, the third and the fourth step, because what he's doing right now, he wants to buy a $1.6 million apartment. So here's few things I like to point out in this specific case. First of all, again, as you're buying an apartment, you need to put down a down payment. Okay, this is a dead money completely. You put a down payment. And also at the same time, now you need to pay mortgage, real estate tax, maintenance, insurance, all of these expenses. Okay, so in his case, and this is I hear this all the time. Oh, why would I pay $5,000 rent to the landlord if I can pay myself? That's why I want to buy a property. I'm going to pay myself. It's going to be my investment property that I'm going to retire on, and that's going to provide retirement money for me. So here's what's wrong. First of all, do not calculate someone else's money, okay? Because once you start calculating how much you're paying your landlord, okay, this is where you're going wrong already. Calculate and focus on your money. And by the way, this is the trap number 1 is the money trap. Okay, is when you have this poor mentality, this mindset when you start focusing on other people's money. No, focus on your money. Okay, so you still, if you're paying 5,000 for rent, but then you're paying 10,000 for all these expenses, mortgage and real estate and all the thing, then you're already negative $5,000. Yeah, but you're not paying the landlord. So, I mean, if that would be me, I would rather pay landlord than lose another 5,000 of your own money. So look at it this way. So second thing is in his particular case, he needs to put down 300,000 down payment. He wants to put down 20%. Okay. So now if you're taking this money out of the business as a business owner, a lot of the business owners, you use your business to take care of your personal lifestyle. Okay, so your business flow of money, whatever you're making money in the business, it flows into your personal accounts, and then you take care of all your personal things. Okay, that's fine. But here's the thing: before you do that, you need to pay taxes. So that's another mistake that many business owners doing. Okay, they're thinking, okay, you know what? I'm gonna take 300,000. I have them accumulated in my business, and I'm just gonna go put it as a down payment. No, you have to pay taxes. So in reality, like in his specific case, it's only 25% he's paying. So then he needs to take actually 400,000. Out of this 400,000, he needs to give 100,000 to Uncle Sam, and only 300,000 he's gonna put into his own pocket. So depending on what's your tax bracket, I mean, in his case, he is lucky. He has a great accountant as us, okay? But then if your tax bracket is like 50%, then look at it this way. If you need to give down payment of 300,000, then you need to take from the business 600,000. Because out of the 600,000, 300,000 is going to go towards taxes. And only 3 you will put it in your pocket. So what's happening right now, you see, like he didn't calculate any of this. So he is already minus 100,000 to the IRS. Plus he's going to be minus this 5,000 every month in cash flow. So he just started winning, and now he's locking himself into this overhead. So he skips steps 3 and 4. No saving strategy, no investing, no cash flow, no freedom. He's actually in negative cash flow. So now case study number 3. So here's another one. So he saved money. He was all good. He went to step 1, 2, 3. He saved the money, but now he didn't get enough education. He wants to buy, fix the property, and then flips the property. So if you have no experience, no deals analysis, no market knowledge, then this real estate is one of the biggest investments, but only if you know what you are doing. Because if you don't know what you're doing, then this investment without knowledge equals to risk and not wealth. Okay, so that's very you can get stuck with this property, and again, that's why you need to understand how to analyze how the market works. So educate yourself, diagnose everything before you start investing. And lastly, another case study, again, see this very, very often, is another client buys the house first he buys the house for himself, then he makes more money. Now, okay, let me buy a house for my parents. Again, thinking, why would they pay rent to someone else? They would rather pay rent to me, and I'm going to become a landlord. And then I'm going to buy a house for my in-laws. They're going to pay rent to me as well. And they're exhausted. They didn't, because they didn't build income, because they build responsibilities. So here's the problem with that. Whenever you have tenants, then you can put the whatever market rate is. But if you have your parents living in there, your family, then try to actually increase your rent. And majority of the time, and I see this because I do all the tax return, majority of the time, parents don't even pay any rent for the house that they live in. So then, is this actually an investment, or this becomes a liability? Okay, so the bottom line is what actually happened is that they never completed the loop. They never completed the loop. No income streams, no cash flow, and then no freedom. And then, that's why they're exhausted. They're working, trying to make all this money. And it seems like there is no way out of that. I did a few of these sessions where we were analyzing the deal. Listen, there's a whole, obviously, formula. There's whole art to studying that. So do watch the replays of that. And then I'll bring some deals here. We can analyze. If this is what you like to do, then I can put together, because I'm analyzing all the deals literally like every day, every week. So I can bring and show you the deals. And I'll tell you guys, like I get all these offers every single day, like, so many offers, like I can't even put a number to that. And they're like, oh, this is great deal, yeah, it's the great deal for the real estate broker because he wants to sell it to me, but that doesn't mean that's a great deal for me. So that's why it's very important, like not all the deals great. You might analyze hundreds of them and only get that one that will be the perfect one. So that's why there is no rush, okay? But if you would like, I'll bring it and then we'll analyze it, these sessions here. So do you see the pattern here? Different people, different situations, but making same mistakes. They're making money but they're not turning it into cash flow. And without cash flow, there's no freedom. So here's what exactly what I teach my clients instead. First, you build income, you invest into assets, then you create cash flow, then you scale, and then you upgrade your lifestyle, not the other way around. And this is what I learned from my mentor, Grant Cardone. If you want the book, put it in the comments. I'll share this with you. So do not skip any steps, because that cash flow will create this lifestyle for yourself. Do not buy the dream before you build the machine. Income is not wealth. Cash flow is wealth. Your home is not your investment. It's your expense. And this is very common that people thinking that this is my home and this is investment. It's not. It's your liability. Freedom comes from income producing assets, not from your home or owning assets. Again, that's another thing. Just having an asset, that doesn't mean that you're free. And I see this a lot, where people accumulating all these houses, but if they're not producing cash flow, then it cannot produce freedom for you. Thank you so much, everyone, and remember, financial freedom is all in your hands.